Hey, welcome back to episode 2 of our crypto trading crash course. On this episode, I want to show you how you can utilize different order types to get your trading to the next level. So let's log into our margin trading account that we opened in the last episode and get some trading done. As you can see, I've pre-selected again the Bitcoin US dollar chart. I've put my chart interval to 1 hour. You can do this with this drop down menu here. And now I want to use some orders to get some trading done today. If you click on the buy or sell button, the new order window will open again like we learned in the last lesson. And you will notice there's a drop down box in the field called order type. I can select here the different order types available at PrimeXBT, which are market orders, limit orders, stop orders, and OCO orders. Now, a market order is the most simple order. It simply means I want my order to be executed immediately at the next available price. So if I, for example, want to buy 1 Bitcoin against US dollar, I select order type market. I click here on send order, confirm my order. You'll notice that my order got immediately executed and is now turning up down here in the position window. However, a market order might not always be the best weapon of choice for the market circumstances. As you can see, for example, I've noticed that in the last couple of days, the market is always ranging between a lower band, which is the lower white line here, and an upper band at roughly 31,500 US dollars. Now, what I want to do is I want to place orders that make sure that if the price of Bitcoin US dollars approaches the upper band, that I sell, and if it approaches the lower band, that I buy, because I want to utilize this range for me. So I can do this if I select here the order type limit order. In this case, I want a buy order and I'll punch in a price that I am willing to pay for my long position in Bitcoin US dollar. Let's say, for example, 29,500 US dollars. I can then select my order duration, GTC, meaning good till cancelled, so until I manually cancel the order, or only good for the day, meaning at the end of the trading day, the order is going to automatically be cancelled by the trading engine. I go on send order, go on confirm. On the chart, you will see now that I've placed a limit order 1 Bitcoin US dollar at 29,500. You will also see the order here on the left in the orders box. And the nice thing now is if I want to adjust this order, for example, I say I want it closer to this white line down here, I can just drag and drop it. I go to edit replace order, confirm, and my order has been changed to 29,405. Now I want to do the same for the other side. I want to place a sell limit order should the market today approach 31,500. I'll make the order GTC again, good till cancelled, send the order, confirm, and you'll see now here represented by a dotted red line that I've placed the order of 1 Bitcoin at 31,500 US dollar. So should the market now go up and reach my limit price for my sell order is going to be executed. Should the market go down today and approach my buy limit, my limit order is of course going to be executed. Now, what can I do to make sure that once one of my limit orders is executed, that I do not manually need to cancel the other? Because what I don't want is one limit order being executed, the market going into the opposite direction, executed my other limit orders, and then I have like 2 positions, 1 sell and 1 buy position, which net each other out and don't lead to any wins or losses. And I can choose something here called an OCO order, which stands for one cancels the other, meaning I want to place at the same time a limit buy order and a limit sell order, but once one of those orders gets executed, the other one gets automatically cancelled. So I can do this here again by choosing limit order, one side buy, one side sell. So let's take the buy order here, 29,400. The sell order at 31,500. GTC again, good till cancelled. I'll send my order, confirm, and you'll see here my orders are in place now again. But should one of those orders, for example, my buy limit order down here, be executed, my other order, the sell order, would automatically be cancelled. And this is very, very useful in ranging markets like we have at the moment. So you can make sure when you're not in front of your trading screen that your orders are still being taken care of. Now, the third type of order you can utilize is a so-called stop order. Don't confuse this with a so-called stop loss order. It's something completely different. With a stop order, we can manage a situation of a so-called breakout. So let's say I want to wait now until Bitcoin US dollar sets up a new trend, and I expect that this trend is going to take place and to start once the market has broken over this white line at the top or under this white line here at the bottom. So what I want to do is, well, my assumption now is that once the price has broken up, for example, to 32,000 US dollars, that it's going to continue upwards. So what I can do now is to tell the order engine, I want to buy, but I only want to buy once the market has reached the price of 32,000 US dollars. So it's kind of like, so you can translate this order type as stop trading engine, I want to buy here. And this is a bit counterintuitive, but can make a lot of sense if you want to trade so-called breakouts. So if you are a person that wants to wait until you think a new trend has established itself. So you can use stop buy and stop sell orders for this occasion. Alright, this concludes the second episode of our crypto trading crash course already. See you in the next episode.